Welcome to the Deep Dive. Today we're looking at SOFI Technologies, specifically their first quarter 2025 earnings. We got the full earnings release, and we listened in on the earnings call afterwards.
Right, the usual deep dive prep.
Exactly. And the mission, as always, is to pull out the really key stuff for you.
Yeah, the core numbers, the insights on revenue, profit, growth.
And what they're forecasting.
Yeah.
Basically saving you the time of digging through it all yourself.
Gets you the bottom line fast.
So ready to jump in?
Let's do it. Where should we start? Maybe at the top line. Revenue.
Yeah, sounds good. What did that look like?
Okay, so record net revenue for Q1 2025, they hit $772 million.
Okay, $772 million.
And that's GAAP, right? The standard accounting.
It's GAAP, yeah. And it's up 20% from the same time last year.
Yeah.
Q1 2024 was $645 million.
A 20% jump year over year. Pretty solid.
It is. And they also highlighted their adjusted net revenue. That also hit a record.
The adjusted figure. How'd that compare? $771 million. So very close to GAAP this quarter, but the growth there was even higher, 33% year over year.
33%. Wow. So adjusted growth is outpacing GAAP growth.
Seems that way for this quarter, yeah. Up from $581 million in Q1 last year. So whichever way you slice it, revenue intake is looking strong.
Definitely a strong signal right out of the gate. Okay, record revenue. What about the bottom line then? Profitability.
All right, profit. So GAAP net income, the official profit number was $71 million for the quarter.
$71 million. How does that stack up against last year?
Well, interestingly, it's actually a bit lower than Q1 2024. They made $88 million back then on a GAAP basis.
Huh. So GAAP revenue up, but GAAP profit down slightly.
Yeah, slight dip there. But look at the earnings per share, the EPS.
Okay, what about EPS?
The diluted GAAP EPS, so profit per share for common stockholders, that actually went up. It was $0.06 this quarter.
6 cents per share. And last year?
It was $0.02.
So EPS tripled even though net income dipped a bit. That's interesting. Must be fewer shares outstanding or something similar affecting that calculation.
Could be, yeah. It definitely shows things aren't always straightforward comparing net income and EPS directly.
Good point. So that's GAAP profit. You mentioned adjusted revenue earlier. What about adjusted profit? Did they highlight that?
They did. Adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization with some adjustments.
Right, a measure of core operating profitability. How did that look?
Another record. $210 million.
$210 million adjusted EBITDA. And the growth?
Pretty substantial, up 46% from the $144 million they posted in Q1 2024.
Okay, 46% growth on adjusted EBITDA. That sounds quite strong.
Yeah, and their adjusted EBITDA margin came in at 27%.
So 27 cents of every dollar of adjusted revenue turned into adjusted operating profit.
Roughly, yeah. It suggests the underlying operations are getting more efficient or profitable. CEO Anthony Nadeau seemed pretty positive on the call, talking about durable growth, product innovation.
You'd expect him to be positive, but those numbers, especially the adjusted ones, seem to back it up. Yeah. Highest revenue growth rate in 5 quarters, you said.
That's what they highlighted, yeah. Driven by that product innovation and brand building he mentioned.
Okay, so revenue's up strongly, adjusted profit is way up.
Yeah.
What's actually driving this growth? Where are the gains coming from?
A lot of it comes down to members and products. They added a record number of new members in the quarter.
How many?
800,000 new members.
Wow, 800,000 in just 3 months.
Yeah, it brings their total up to 10.9 million members. That's a 34% increase compared to last year.
And are these members using more SOFI products?
Seems so. They also added a record 1.2 million new products, so things like checking accounts, loans, investment accounts.
Right.
Total products are now at 15.9 million, up 35% year over year.
So growth in both members and product adoption per member, essentially.
Exactly. And the financial services segment specifically is booming. That's SOFI Money, SOFI Invest, things like that.
How's that doing?
Revenue there more than doubled, hit $303 million.
Doubled. That's huge. What's fueling that?
Well, growth in SOFI Money, expansion in their loan platform business, we can touch on that, and innovations in SOFI Invest, like a partnership with Templum.
Okay, so broadening out beyond just lending.
Definitely. That doubling shows they're really building out that financial ecosystem. It creates stickier customers, more revenue streams.
Makes sense. You mentioned the loan platform business. What's happening there?
Yeah, so this is interesting. They're not just lending their own money. They facilitated over $8 billion in new loan commitments and originated $1.6 billion in loans for third parties in Q1.
originating for others, like
Yeah.
banks or investment funds.
Exactly. They mentioned deals finalized with Blue Owl, Fortress, and Edge Focus. It's a way to generate fee income using their platform without putting the loans on their own books. Capital light.
Smart. Less risk for them, leverages their tech.
Right. And their own overall loan originations were also at a record, $7.2 billion in Q1.
$7.2 billion. How does that compare?
That's a 66% increase year over year. So lending is still growing very fast overall.
66%.
Yeah.
Even with concerns about the economy sometimes.
Apparently so. Even home loans grew 54%, which they linked to a new home equity product they launched.
Tapping into home equity makes sense in the current rate environment, maybe?
Could be. And they're not stopping. They mentioned plans for a new personal loan targeting prime credit card customers and also a Smart Start student loan refinancing option.
Always adding new products. And what about things like interchange fees from debit and credit card spending?
Yeah, in that financial services segment, interchange fee revenue was up 90% year over year,
90%.
driven by nearly $16 billion in annualized spending across SoFi Money and their credit card products. So people are definitely using the cards.
Clearly. Okay, so growth looks strong across the board, members. Products, financial services, lending platforms, originations. Let's talk efficiency and profitability again. 6th consecutive quarter of GAAP profit, right?
That's right. 6 quarters in the black on a GAAP basis.
Yeah.
And we mentioned that 27% adjusted EBITDA margin.
Mm-hmm. What about the different segments? Is financial services profitable yet? It used to be a drag.
Big improvement there. Its contribution profit, so revenue minus direct expenses for that segment, jumped significantly. It was $148.3 million, which is up $111 million from last year.
Wow, a huge swing.
Yeah, and the contribution margin for financial services grew to 49%, so it's becoming a much more profitable part of the business on its own.
That's a key development. What about net interest income from their lending spreads?
Also up. $498.7 million, a 24% increase year over year.
Okay, and what drove that? More loans, better margins.
Both, really. Average interest earning assets were up 23%, so more loans and investments, but they also improved their cost of funds.
Cheaper funding.
Yeah.
Deposits, maybe.
Exactly. Their net interest margin, or NUM, actually increased from the previous quarter up to 6.01%, primarily due to lower cost of funds, mostly from deposits being cheaper than, say, warehouse credit line.
Right, that bank charter paying off.
Definitely. They highlighted something like $515 million in annual interest expense savings from funding with deposits versus those older, more expensive facilities.
That's a massive saving. Okay, so profitability metrics looking good. Efficiency seems to be improving. What about credit quality? Always a concern with lenders.
Sure. They reported improved charge-off rates, that's loans they don't expect to collect, compared to the previous quarter, Q4 2024.
For which loan types?
For both personal loans, which came in at 3.31% annualized, and student loans at 0.47%, so lower losses than the end of last year.
Lower losses are always good. What about delinquencies? Loans that are late but not charged off yet.
The 90-day delinquency rate for personal loans on their balance sheet actually decreased for the 4th consecutive quarter.
4th quarter in a row. That suggests some stability or improvement in borrower health, maybe?
Or maybe tighter underwriting on recent loans. They seem confident, though. They're sticking to their assumption of a 7-8% maximum loss over the entire life of their personal loans.
Okay. And are they selling loans? Managing their exposure?
Yeah, strong activity there. Sold or transferred over $3.1 billion in personal and home loans. And they did their first securitization of loans originated via that loan platform business since 2021.
Securitizing those partner loans. How did that go?
They said it was done at industry-leading cost of funds levels, so it sounds like the market liked the quality of those loans.
Good sign for that platform business. Okay, so credit seems stable, maybe even improving slightly quarter over quarter.
That's the picture they painted, yes. Recent loan vintages are apparently performing well below that 7-8% lifetime loss expectation, too.
All right, so strong Q1 performance overall. What did this mean for their outlook? Did they update their guidance for the full year 2025?
They did, and they raised it quite significantly across the board.
Raised guidance. Okay, that's usually a bullish sign. What are the new numbers? Let's start with revenue.
Full year 2025 adjusted net revenue, they now expect it between $3.235 billion and $3.310 billion.
Okay, and the previous range was?
$3.200 billion to $3.275 billion. So a decent bump up.
Right. What does that imply for annual growth?
That new range implies 24% to 27% year-over-year growth. So still very strong growth expected for the full year.
Okay, raised revenue guidance. What about profit guidance? Adjusted EBITDA.
Also raised. The new range is $875 million to $895 million.
Oh,
Up from $845 million to $865 million previously.
another solid increase.
Yeah.
And GAAP net income.
Raised too, now expecting $320 million to $330 million for the year.
In the old range.
Was $285 million to $305 million.
Okay, so significant increases there too. What about earnings per share, the GAAP EPS?
Also guided higher, they now expect $0 to 27 cents to $30.28 per share for the full year.
27 to 28 cents previous.
Business dollars 25 to $7.27, so up a couple of cents there at the midpoint, assuming a 26% tax rate for the rest of the year, they noted.
Right, so raised guidance on revenue, adjusted EBITDA, GAAP net income, and GAAP EPS. That definitely signals confidence for management.
Absolutely. And one more thing on guidance, they also upped their expectation for member growth, now expecting at least 2.8 million new members this year.
2.8 million new members in 2025. That implies, what, 28% growth in the member base?
That's right, 28% growth.
Did they give any specific guidance for the next quarter, Q2?
They did. For Q2 2025, they're projecting adjusted net revenue of $785 to $805 million.
Okay.
Adjusted EBITDA between $200 and $210 million. GAAP net income of $60 to $70 million.
Got it.
And GAAP EPS between 0.5 and 0.5 and 0.6 cents. So pretty much in line sequentially with Q1's actual results, maybe slightly lower on some metrics depending on where they land in those ranges.
Okay, provides a near-term picture too. Were there any other sort of notable points from the report or call? Anything else jump out?
A few things. They're still investing in brand awareness. Mentioned their unaided brand awareness is around 7%.
So relatively low, lots of room to grow there.
Yeah. They highlighted sponsorships like the TGL Golf League presented by SOFI, their NBA partnership, and a new one with CMA Fest in Nashville. Trying to get the name out there.
Building the brand. Makes sense. Anything on new features of products already launched?
They mentioned launching a new fee-based subscription option called SOFI Plus. Said it's seeing high adoption and helping with cross-selling other products.
Ah, premium tier. Interesting. What about deposits? You mentioned they help with funding costs.
Deposits grew to $27.3 billion, and they said over 90% of the SOFI money deposits are from members who use direct deposit.
So sticky primary banking relationship type deposits, that's valuable.
Very valuable for stable, low-cost funding. Also, the technology platforms segment, that's the part that serves other businesses like Galileo revenue there, increased 10% year over year.
Okay. Not as explosive as financial services, but still growing.
Yeah, steady growth. They highlighted some new client wins like Wyndham Hotels and Resorts and Mercantile Banco. And just to round it out, the lending segment's adjusted net revenue was up 27% year over year.
Okay, so growth across all three segments, lending, financial services, and technology platform.
That's the picture, yeah.
All right, so let's try to summarize this for you, the listener. We saw SOFI post record revenue in Q1, both GAAP and adjusted.
With particularly strong growth in adjusted revenue.
Member and product growth also hit records, driving significant expansion, especially in the financial services segment, which more than doubled its revenue.
Yeah, and becoming much more profitable on a contribution basis.
Profitability showed a bit of a mixed picture on GAAP net income year over year, but GAAP EPS tripled, and adjusted EBITDA saw a very strong 46% growth.
Right, hitting record levels with a solid 27% margin.
Credit quality metrics like charge-offs and delinquencies showed improvement compared to the prior quarter.
And they maintained their lifetime loss outlook.
And maybe most importantly, based on this strong start, SOFI significantly raised its financial guidance for the full year 2025 across revenue, adjusted EBITDA, GAAP net income, and EPS.
Yeah, signaling strong confidence despite any broader economic uncertainty out there.
So it really paints a picture of a company firing on multiple cylinders right now.
It does. And this strong report and the raised guidance, it really makes you think, doesn't it?
How so?
Well, for you listening, what does this performance suggest about where fintech is heading? And specifically, SOFI's potential to really solidify itself as a leader in that space. Is this momentum sustainable?
Good questions.
Yeah.
Something for you to chew on. Maybe this recap gives you a solid foundation, and if you're intrigued, you can always dig into the full report or keep an eye on SOFI News yourself.
Exactly. See how the story unfolds from here.